Mr. Speaker, I rise in support of HJRes 30, a Congressional Review Act resolution nullifying the Biden administration's attempt to politicize the retirement savings of Americans. ESG investing puts the future of millions of Americans in jeopardy. Due to Biden's reckless economic policies, too many Americans are worried about rising cost of living. Diverting retirement savings to fund social justice causes will make this problem even worse. And for current retirees, the situation is especially salient. Last year, the Biden Department of Labor published a rule allowing retirement plan fiduciaries to consider environmental, social, and governance, ESG, factors when making investment decisions and exercising shareholder rights. The rule removed common sense protections for retirement savers established by the Trump administration, which ensured that retirement plan fiduciaries evaluate investments and exercise shareholder rights based only on the financial benefits to participants and beneficiaries. That is what retirement savers expect. Now, thanks to Democrats, workers can be placed into ESG investment vehicles by default. And if a fiduciary finds that two investments are equal, the fiduciary is allowed to use collateral ESG factors to break the tie without justifying or documenting that decision. And while my colleagues on the other side of the aisle have argued that the Biden rule is neutral, they have done a poor job of hiding the administration's true intentions. The department issued the rule in response to two executive orders on climate change, and the explanation of the rule is littered with Democrats' preferred political projects, such as labor relations, climate change, and workforce and corporate board diversity. Further, DOL officials have repeatedly stated that they will pursue additional actions concerning ESG in retirement plans. The left is using ESG investment criteria as a political tool to cudgel companies into accepting leftist policies. This is how the left always operates. This is just the first step. If we let this continue, the left will use ESG investing to push non-compliant companies out of the marketplace. This is pernicious and it is hypocritical. It is unacceptable to encourage fiduciaries to sacrifice the savings of Americans to the orthodoxy of the woke left. In fact, this is prohibited under the Employee Retirement Income Security Act of 1974, ERISA, as affirmed by the Supreme Court. Yet the Biden administration's rule permitting and encouraging retirement plan fiduciaries to consider ESG when investing workers' savings flips ERISA on its head. By paving the way for ESG investing in employer-sponsored retirement plans, President Biden is threatening the retirement savings of Americans. Such a fundamental change to ERISA should be debated and considered in Congress, not enacted through executive fiat illegally. Americans invest to secure their future, not to fund the Green New Deal or leftist pet projects. Fiduciaries governed by ERISA should not be allowed to make investments they know will not pay off. A fiduciary's most important responsibility is to make investments that are in the financial interest of workers and retirees. It's time to stop this madness. That is why I support the resolution to nullify the Biden administration's destructive retirement plan rule. I urge my colleagues to put workers and retirees above politics and vote for this resolution. I reserve the balance of my time.
The gentlewoman reserves. For what purpose the gentleman from Virginia is recognized.
Mr. Speaker, I yield myself such time as I may consume.
Gentleman is recognized.
Speaker, I rise in opposition to HJRes 30, a Congressional Review Act resolution of disapproval to nullify a popular and sensible rule issued by the Biden-Harris administration last year. Workers should be able to invest their retirement savings in a way that reflects their values, such as combating climate change, without sacrificing investment returns. That's why the Biden-Harris administration issued a rule to clarify that retirement plan beneficiaries may consider the economic effects of climate change and other environmental, social, and governance factors, or ESG factors, when they make investment decisions for participants in retirement plans. Now, be clear, this rule is not an ESG mandate. Additionally, the rule does not change the fiduciary standard to which professionals who make investment decisions for retirement plans are bound. They must still prioritize the interests of retirement plan participants and cannot sacrifice investment returns to pursue ESG goals. So let's be clear. Consideration of ESG factors is not at odds with making a profit. In fact, workers' profit is still central, but if a company has negative externalities, such as carbon-intensive business practices, vulnerability to sea level rise, high liability risks, or record of mistreating workers who may go on strike, its stock could suffer in the long term. Workers often contribute to their retirement for decades before drawing down on their savings, so it makes sense that retirement plan beneficiaries must consider the long-term time horizon when making investment decisions. Finally, there's widespread support for the Biden-Harris administration's rule. Of comment letters submitted on the proposed rule, 83% of the letters submitted by institutions like corporations, financial firms, and labor organizations supported the rule, and over 97% of letters submitted by individuals supported the rule. Simply put, the Biden-Harris rule reflects the best interests of the American people and our economy. We should not get rid of this popular and reasonable rule by this resolution. The rule just simply allows retirement plan beneficiaries to appropriately consider ESG factors. Retirement fiduciaries, not House Republicans, are best positioned and bound by law to make prudent investment decisions on behalf of retirement savers. Mr. Chairman, Mr. Speaker, I reserve the balance of my time.
The gentleman reserves. The gentlelady from North Carolina is recognized.
Thank you, Mr. Speaker. I now yield 5 minutes to the gentleman from Kentucky, Mr. Barr, the originator of this CRA.
The gentleman from Kentucky is recognized for 5 minutes.
Thank you, Mr. Speaker, and I thank the gentlelady, the chairwoman of the committee, for her leadership in fighting the politicization of capital allocation and the politicization of retirement savings. Mr. Speaker, today, House Republicans stand on the side of retail investors. We stand up for millions of Americans around the country who are increasingly asking themselves this simple question: when will I be able to retire? This Congressional Review Act measure that I am offering is a bipartisan, bicameral joint resolution disapproving of a Department of Labor rulemaking that will politicize Americans' retirement accounts and jeopardize their retirement security. This measure simply states that retirement plan sponsors be required to prioritize maximum financial returns for investors ahead of non-pecuniary factors like environmental, social, and governance standards, a political agenda. We do so in a moment where 1 in 5 Americans have saved nothing for their retirement, including 1 in 3 baby boomers, the generation closest to retirement. We do so in a moment when 78% of Americans are either extremely or somewhat concerned about affording a comfortable retirement. And we do so in a moment where the gap between the amount of money that Americans have saved for retirement and the amount that they will need for retirement is $3.8 trillion. That's why, Mr. Speaker, Congress must act to block the Biden administration's recent rule that greenlights so-called ESG investing in millions of Americans' retirement plans, plowing them into less diversified, higher fees, and lower performing portfolios at precisely the time that we need to maximize financial security for Americans approaching retirement. So let's consider the facts. According to a recent Wall Street Journal report, ESG funds carry 43% higher fees than non-ESG funds. That's what they want. They want Americans to be forced into higher fee funds. A recent study from NYU and the University of Southern Southern California found that over the past 5 years, global ESG funds have underperformed the broader market by 250 basis points per year, an average of 2.6% lower return than non-ESG funds. And this stands to reason because ESG funds are by design less diversified. This is investing 101. When you discriminate against energy stocks and you are heavy in tech, when you're in a tech sell-off and when energy performs the market, who loses? The American retail investor who is unwittingly invested in these fraudulent, cancerous funds. This means that an investor who put in $10,000 into an average global ESG fund in 2017 would have realized a $1,750 lower return than if they had invested in the broader market. And while some of my friends on the other side of the aisle argue that ESG investing is actually driven by investors themselves, not ideologues, at asset management firms or in the White House who want to push their environmental or social causes at the expense of retail investors, a 2021 study conducted by the University of Chicago and FINRA proves investors largely do not care. 21% of investors don't even know what ESG stands for. Is that popular? Is that what popular ESG is? And this neutrality nonsense. Look, nobody's saying you can't invest based on your values, but this bill would steer people unwittingly into these funds, and the status quo does not deny people to invest based on their values. It just says that the default has to be to maximize returns. So, Mr. Speaker, this debate today is not about investor protection. It's about the ability of investors to maximize returns. It's also about energy security. Even if you don't have a retirement account, this radical ESG movement is hitting your wallet. Since President Biden took office, his administration has waged a war on American energy production, not just holding up leases or blocking infrastructure, but through financial regulation, the weaponization of financial regulation to divert resources and capital and financing away from the American energy sector. A 25% decline in investment in natural gas and oil investments since 2021, and the result, gas prices are up 40%, and diesel prices are almost double. Household energy costs hit a 10-year high this winter, costing average American families $1,200, according to a report from the National Energy Assistance Directors Association. And these price hikes and the decline in investment in our energy supply come at the exact time that the Biden administration itself estimates that by 2050, almost half of our nation's energy supply will be made of oil and natural gas. Mr. Speaker, we need more, not less, capital investment and financing of American energy. So I implore the administration, it's time for you to end your assault on energy production that is fueling 40-year high inflation. We as members of Congress cannot allow this administration to continue to perpetrate this war on American energy at the expense of investors. And with that, Mr. Speaker, I yield.
Gentleman reserves. The gentleman from Virginia is recognized.
Speaker, I yield 2 minutes to the gentleman from Illinois, who is the co-chair of the Congressional Sustainable Investment Caucus, Mr. Caston.
The gentleman from Illinois is recognized for 2 minutes.
Thank you, Mr. Chairman. So 15 years ago, more than half of U.S. electricity came from coal. Today, it's less than 20%. We now generate more energy from renewables than from coal. This isn't anti-energy. It's about cheap energy. 2022, last year, 10% of all vehicle sales in the United States were EVs. That was up from 6% the year before, 2% the year before that. ExxonMobil and Chevron today are trading at about 8 to 9 times their earnings. I would compare that to companies like First Solar and Tesla that are trading at 40 to 60 times earnings. Let me dumb this down for you all. 10 years ago, if you shifted your investment portfolio away from fossil energy towards climate-friendly investments, you would be richer today. Now, my Republican colleagues, you all talk a good game about how you're into personal freedom, and yet you are taking individual investors' freedom away from them with this bill. You all talk a good game about how government should not be picking winners and losers. Why do you all keep picking losers? 2011, a guy named Hugo Chavez, he redirected Venezuelan oil worker pensions into a Ponzi scheme running by a political ally. And now my Republican colleagues, who a couple of weeks ago voted to oppose socialism in all its forms, are thinking that Hugo Chavez guy seems pretty smart. Let's do the same thing. You know what you call capitalism when you're losing? Woke capitalism. So, if you all are afraid of free markets, if you want to destroy workers' pensions, if you oppose individual freedom, if you want to force your constituents to invest in proven losers, then please vote for this resolution. Be honest about your values. For everyone else, vote no. I plan to do so proudly and honestly. Yield back.
The gentleman yields. The members are reminded that to direct their conversations to the chair. The gentlelady from North Carolina is recognized.
Thank you, Mr. Speaker. I now yield 1 minute to the gentleman from Georgia, Mr. Allen.
The gentleman from Georgia is recognized for 1 minute.
I thank the gentlelady. Mr. Speaker, over the past 2 years, one thing has become clear. This administration cares more about advancing its radical Green New Deal agenda than about the financial well-being of the American people. We've seen it with their energy policy, but the latest example is the Biden administration's rule to inject woke ESG factors into workers' retirement accounts. Thanks to President Biden's economic policies, workers' retirement savings were down 10% in 2022 compared to 2021. Why is this administration doubling down to further jeopardize Americans' retirement? Retirement plan sponsors have two responsibilities to their client: maximize returns and minimize risk. But the Biden rule will allow asset managers to impose a political agenda on Americans at the expense of retirement savings. The Biden administration should not be jeopardizing Americans' retirement by allowing plan managers to gamble their savings on ESG funds that have proven to be riskier and charge steeper fees. That's why I co-sponsored this bill with my friend Andy Barr to use our authority to nullify the Biden rule and protect Americans' hard-earned retirement savings from politically motivated mismanagement. Thank you, and I yield back.
The gentleman reserves. The gentleman from Virginia is recognized.
Mr. Speaker, I yield 2 minutes to the distinguished ranking member of the Health, Employment, Labor, Pensions Subcommittee, the gentleman from California, Mr. DeSaulnier.
The gentleman from California is recognized for 2 minutes.
Thank you, Mr. Speaker. Thank the gentleman for yielding. The Department of Labor's environmental, social, governance, and rule is good for retirees, and it's good for the American economy. Allowing ESG considerations can help financial professionals identify investments that will be sustainable in the long term in the best interest of their clients. The rule is not an ESG mandate. It simply clarifies that the professionals who make investment decisions for retirement plans do not violate their fiduciary duties by merely considering ESG factors. Existing law already says that these professionals' primary purpose is to make the best financial choices for the plans, and this rule does not change that at all. It merely is a recognition that if a company is inherently risky because of the business they do on their internal practices, its stock could suffer in the long run. Just like American consumers can be motivated to disinvest from companies that pollute or mistreat their workers, now investors will have the same abilities. As a ranking member of the Health, Employment, Labor, and Pensions Subcommittee, I have seen overwhelming support for this rule, especially from the financial industry. Rolling it back would be a significant step backward. I strongly oppose HJRes Resolution 30 and encourage all members to do the same so they can leave retirement plan decisions to the retirees and the professionals they respect and they work with. Thank you, and I yield back.
The gentleman yields back. The gentlelady from North Carolina is recognized.
Thank you, Mr. Speaker. I now yield 3 minutes to the distinguished gentleman from Virginia, Mr. Good.
The gentleman from Virginia is recognized for 3 minutes.
Thank you, Mr. Speaker. Thank you, Chairman Foxx. Today, the House can repeal a policy from the Department of Labor that harms Americans who simply want to save for retirement. This new rule from the Biden administration says that investment decisions in employer-sponsored retirement plans can be based on climate change and other environmental, social, or governance factors. So typically, without the knowledge of the retirees, their investment funds can be invested in underperforming investments that subsidize unreliable and unaffordable energy. Congress never originally intended for 401ks to be used to advance the priorities of the phony climate movement or to push a social justice agenda. They were simply intended to help people to have the resources they need in retirement. And if ESG-based stocks are higher performing, they would get those investment dollars anyway without this new rule. But Americans inherently know that investing should be about evaluating risk and return from a financial point of view. Hardworking Americans want to know that their investments have strong economic fundamentals that will help them build wealth over a lifetime of work. If Congress is successful in overturning this rule, the investing standard will return to one based on financial factors only. It's bad enough that Biden inflation has eroded the spending power of many retirement savings accounts. Matter of fact, the average retirement account is down 30% over the last 2 years. And many retirees are having to change their retirement plans or to downsize or to work longer. There's even an increase in the number of Americans who are borrowing or withdrawing from the retirement accounts before retirement, just trying to make ends meet. And still, the Department of Labor used executive fiat to leverage trillions of dollars that would be vested in retirement plans to advance their woke agenda that can't pass Congress. But with this vote, Congress can put in some checks and balances to work for the American people, and I urge my colleagues in the House and the Senate to protect the retirement plans of hardworking Americans by voting against this bill. And I yield back.
The gentleman reserves. The gentleman from Virginia is recognized.
Thank you, Mr. Speaker. Mr. Speaker, I yield 2 minutes to a distinguished member of the Committee on Education and the Workforce, the gentlewoman from Minnesota, Ms. Omar.
The gentlelady from Minnesota is recognized for 2 minutes.
Thank you, Ranking Member. Mr. Speaker, I rise today in strong opposition to Resolution 30. When we, as Americans, are given the opportunity to know what investments to make, the kind of investments that we can make, and the kind of impacts that they will have, that matters. That choice should always be with each one of us. The investments that we make might have an impact on the rest of the world. Many of us would be outraged if we knew that our investments went towards forced labor activities in China and other parts of the world. And yet this resolution would make it difficult for hardworking Americans to determine what investments are being made in their name. Our constituents deserve the freedom to access this information, to have the right to ensure that their money is being invested in a way that is aligned with their values. So I urge my colleagues to reject this resolution, to protect the rights of Americans, to make financial and moral decisions about the kind of investments that they want their retirement to be made of. Thank you, and I yield back.
The gentlelady yields back. The gentlelady from North Carolina is recognized.
Thank you, Mr. Speaker. I now yield 3 minutes to the gentleman from Wisconsin, Mr. Grothman.
The gentleman from Wisconsin is recognized for 3 minutes.
Thank you. Well, I'm glad this House resolution is before us today. We continue to march towards a different sort of government, and part of that different sort of government is the ESG ideology being imposed or encouraged on America's corporations. This is an ideological push on corporations, of which there is too much already. Already, particularly big corporations have seminars giving the left-wing view of the environment, the left-wing view of race, the left-wing view of agenda. And this is to further push down on them and say, here you are, Mr. Big Corporation. We'll give you a nice pat on the back if we use all of your stockholders' money to promote a political agenda. Obviously, that should be offensive to any freedom-loving person in America. Of course, in addition to that, the new rule will, studies from UCLA and New York University shows that the average corporation that engages in this ESG stuff, their market goes up 6.3% instead of 8.9%. So the shareholders have to pay a price. But to me, secondarily to the shareholders paying a price It's this pound that we already get from the universities, we already get from the popular culture in Hollywood. Now we've got to get it from big business. The traditional freedom-loving moral values of America are something to be stepped aside, and we, big corporate America, are going to ingratiate ourselves to the left-wing bureaucrats in Washington by following the ESG standards. I am very grateful that my good friend from North Carolina has let me give this speech, and I sincerely hope everybody stands up for freedom. The other side of the aisle would not like it if the people who decide what ESG was written by Jim Jordan. Okay, and maybe someday that'll happen. I don't know. I liked it better when the big corporations stay out of this thing, but you want to put the sword over their throat and say, this is the view of the world, you must adapt, you must have seminars and shove it down the throats of your employees. It's a bad day for America if this thing doesn't pass. Thank you.
Gentleman yields back. Gentleman from Virginia is recognized.
Mr. Speaker, I yield 2 minutes to a co-chair of the Congressional Sustainable Investment Caucus, the gentleman from California, Mr. Vargas.
The gentleman from California is recognized for 2 minutes.
Thank you very much, Mr. Speaker, and thank you very much, Mr. Ranking Member. Sometimes things around here get topsy-turvy, and we have a group here involved in an anti-capitalist crusade against free market principles, attempting to prevent financial institutions from allocating capital in accordance with investors' preference and risk management priorities. Under their proposed resolution, investment advisors can no longer consider environmental, social, and governance factors that materially impact a company's performance and bottom line. That means that your hard-earned dollars cannot be adequately invested because you, the American worker, are now exposed to greater risk. It's interesting, it doesn't say you must invest in ESG. All that the Biden administration says is you can, if you want to. Whatever happened to capitalistic ideals that you should be able to invest in what you want? You're trying to force people to say, no, you cannot invest looking at a strategy of ESG. That doesn't make any sense at all. Doesn't make any sense at all. It's anti-capitalistic, it's anti-market, and we should not support this resolution. With that, I yield back.
The gentleman yields back. The gentlelady from North Carolina is recognized.
Thank you, Mr. Speaker. I yield 2 minutes to the gentleman from Florida, Mr. Bean.
The gentleman from Florida is recognized for 2 minutes.
Thank you, Madam Chair, and thank you, Mr. Speaker. He's at it again. President Biden's war on America's energy continues. It started day one with the cancellation of the Keystone XL pipeline, and 2 years later, this administration is pushing environmental, social, and governance, or ESG, to clog America's oil and gas production. The Department of Labor is seeking to weaponize American retirement funds as part of President Biden's anti-fossil fuel agenda, all at the expense of your retirement savings. ESG requirements not only exacerbate high energy costs, but also to contribute to inflationary woes and weaken our national security. To be clear, ESG is more government control. ESG is less freedom for Americans. ESG simply is a woke capitalist scam posing as responsible corporate governments, which robs Americans of their hard-earned retirement investments. It's time to stand against the progressive mob who only want an inch but seem to take a mile. So today we're going to say no. We're going to draw the line and say it ends now. It's time to stand against the progressive mob and safeguard our nation's energy independence from the outstretched claws of ESG. A correct vote on the bill today is yes. As a yes vote today says no to ESG. I yield back.
The gentleman yields back. The gentleman from Virginia is recognized.
Mr. Speaker, I yield 2 minutes to the gentleman from Rhode Island, Mr. Magazzino.
The gentleman from Rhode Island is recognized for 2 minutes.
Thank you, Mr. Speaker. I rise to oppose this misguided resolution, which will tie the hands of investors from doing their jobs and will hurt the retirement savings of millions of hardworking Americans. The evidence is clear. Companies that adopt thoughtful policies to manage their environmental, social, and governance risks outperform those that don't. I'll say that again. Companies that have thoughtful policies to manage their environmental, social, and governance risks outperform those that don't. Don't believe me? Ask the shareholders of BP, whose stock fell more than 50% after the Gulf oil spill, wiping out billions of dollars of shareholder value. Or Volkswagen, whose stock fell 45% after they were caught cheating on emissions tests. How about Norfolk Southern? They're in the news lately. Their stock is tanking because of their inattention to managing the safety of their operations. The fact is that environmental, social, and governance issues are financially material to company performance, and any investor who knows what they are doing would be foolish to ignore those factors. I know this because as state treasurer and as an investor in the private sector, I spent the last 10 years studying corporate performance, and ESG issues matter. But even if you don't agree with me, even if you think that environmental and social issues are not material to performance, you ought to at least believe that in a free market, investors should have the power to make their own decisions and to choose which factors they think are material or not. Let them use their professional judgment. Don't try to police what the investors are thinking when they're making decisions. Why is it that the Republican majority, which claims to be the party of limited government and free markets, are abandoning their free market principles and trying to dictate to investors what they have to think? It makes no sense. If anyone was wondering what this is about, it is not about free markets. It is not certainly about protecting workers' retirement security. It's about standing up.
The gentleman is recognized.
Yeah.
I yield an additional minute.
The gentleman is recognized for another minute.
Look, I'll just say again, and thank you to the ranking member, let's be honest about what this debate is really about. It is not about protecting worker retirement savings. If we were serious about that, we would be saying that ESG is material and should be considered. It is not about free market principles. Could it be that it has to do with the oil and gas industry pouring tens of millions of dollars into campaign accounts on the Republican side? Could that be what is driving this? Well, I think we see now where the priorities of our colleagues on the Republican side lie, not with workers, not with free market principles, but with doing the bidding of the oil and gas industry. And with that, I yield back.
Gentleman yields back. The gentlelady from North Carolina is recognized.
Thank you, Mr. Speaker. I yield 2 minutes to the gentleman from Kentucky, Mr. Barr.
The gentleman from Kentucky is recognized for 2 minutes.
I thank the chair, and I don't know if my colleagues on the other side of the aisle don't understand the existing law and what this resolution does and the Department of Labor's new rule is, or whether they're just trying to confuse the listeners and the watchers here today. Because the truth is, this is not material for the vast majority of Americans. The studies show that most Americans don't even know what ESG is. And to the extent Americans do find it material, nothing in this resolution prohibits an American from allocating their capital the way they want to. But what this resolution will do is stop the Department of Labor from coercing Americans into lower performing, higher fee, less diversified, politicized funds. We must stop the politicization of allocation of capital. And when my friend from Illinois says, well, why are Republicans picking losers? Really? Really? In 2022, the S&P 500 energy sector ended the year a whopping 59% higher than where it started, amid a brutal bear market in which the S&P 500 overall lost 20%. If you are invested in ESG in 2022, you are a massive loser because you are divested from energy. Stop the politicization of capital. If you want to give Americans freedom to choose what is material for them in investing, vote against the Department of Labor rule, which would conceal what the Department of Labor is doing, which is steering Americans into investments that have political values that they disagree with. Give Americans true transparency. Go back to the Department of Labor rule under the Trump administration, which says the default should always be consistent with ERISA, maximizing financial performance. And if you want an alternative, if you want to subordinate financial returns to the environment, to climate change, to social justice, to whatever, and you really don't care about your retirement security, then you can choose that. But let the American investor decide, and the
gentleman's time
default
has
should
expired.
always be maximum investor returns. I yield.
The gentleman yields. The gentleman from Virginia is recognized.
Mr. Speaker, I'm prepared to close.
The gentleman reserves.
My time.
The gentlelady from North Carolina is recognized.
Thank you, Madam Speaker. Madam Speaker, it's a little ironic that our side of the aisle is being accused of being anti-capitalist and anti-free market. I'd like to clarify for the record the content of the Trump Department of Labor rule on retirement plan ESG investing. Under the Trump rule, if a fiduciary finds that an ESG factor is a pecuniary or financial factor, it can be considered when investing and exercising shareholder rights. Here are a few excerpts of the Trump rule to set the record straight. Nothing in the final rule is intended to or does prevent a fiduciary from appropriately considering any material risk with respect to an investment. Another quote, the ERISA fiduciary duty of prudence requires portfolio-level attention to risk and return objectives reasonably suited to the purpose of the account, diversification, cost sensitivity, documentation, and ongoing monitoring. The proposal was not intended to suggest that these principles apply other than neutrally to all investment decisions. To suggest that the Trump rule barred a fiduciary from appropriately considering any factor that may be material to an investment is blatantly false. If anything, the Trump rule was neutral as to the prudent decisions of fiduciaries. And with that, Mr. Speaker, I reserve, but if my colleague is ready to close, I will close also.
Gentlelady from North Carolina reserves. Gentleman from Virginia is recognized.
Thank you, Mr. Speaker. Mr. Speaker, I yield myself the balance of the time.
The gentleman's recognized.
Thank you. Mr. Speaker, during this debate, we've heard a lot about ESG investing, and it's clear there's a difference of opinion on it, but whether members of Congress see things the same way is not the point. What matters is that the Biden-Harris rule puts the decision-making when it comes to considering ESG factors where it belongs, in the hands of retirement plan beneficiaries who are best positioned and bound by law that has not changed to act prudently on behalf of plan participants. And that's where the decision-making should stay. They, not members of Congress, know what's in the best interest of their plan participants, and they are bound by their fiduciary responsibilities to do the right thing. Now, when supporters say that the fiduciary should not consider non-pecuniary factors, they ignore the fact that ESG factors are can in fact be pecuniary, because often ESG factors, such as sea level rise, can have a profound effect on the value of an investment. Those who recognize this should be able to make reasonable investments based on that knowledge. Now, Mr. Speaker, I have asked unanimous consent to submit several letters from organizations opposed to HJRes 30. 83% of institutions that submitted comments were in favor of the underlying rule. These letters who are opposed to HJRes 30, these organizations include the AFL-CIO, the Americans for Financial Reform, Public Citizen, SEIU, Environmental Defense Fund, the League of Conservation Voters, Sierra Club, Natural Resources Defense Council, Union of Concerned Scientists, and others. These organizations have diverse missions, but they all agree that HJRes 30 should be rejected. And Mr. Speaker, I ask unanimous consent that 3 letters from financial services firms who submitted supportive comments on the underlying rule be admitted to the record. These firms include B&Y Mellon Investment Management, Lazard Asset Management, and Putnam Investment, who have trillions of dollars in assets under management. This is just a small sample of the financial industry's support for the underlying rule. We should not overturn the rule with this resolution. For these reasons, I oppose HJRes 30 and encourage all members to do the same, and I yield back the balance of my time.
Okay. Without objection, the letters will be entered into the record. The gentleman yields back. The gentlelady from North Carolina is recognized.
Thank you, Mr. Speaker. Mr. Speaker, I urge my colleagues to support HJRes 30 to stop the Biden administration from decimating the retirement savings of millions of Americans. ESG funds will not give retirees the secure future they need. According to a former BlackRock senior executive, ESG funds underperformed the broader market compared to non-ESG funds over the last 5 years. And retirees are worried already about the rising costs of goods and services, not whether a company is using plastic straws in its cafeteria. Americans deserve to have a secure retirement. This means retirement plans need to focus solely on workers' financial interests. That's why I urge my colleagues to support this resolution, and I yield back, Mr. Speaker.
Gentlelady yields back. All time for debate has expired. Pursuant to the House Resolution 166, the previous question is ordered. The question is on engrossment and third reading of the joint resolution. Those in favor say aye. Those opposed, no. The ayes have it. Third